Hello again. And now for our final recording coming from Learning Unit 3. So this one is a lovely question because it combines lots of different things. So we're going to look at doing a mini income statement as well as the movement during the bank account over the period of a month. And we're going to look at collecting cash and paying cash. We're looking at purchases, we're looking at sales. So there's a lot happening over here. And we are also going to change the time that it takes to collect the money from the debtors, so the debtors collection period, to see what effect that has on the bank balance of the business. So whether it's going to improve the liquidity and the cash flow position or not. So in order to do that, I want to share with you a question. So I'm just setting up again. Sorry, in Teams, it does take quite some time to get us up and running. Yes, this is my question. So it is quite similar to question 3.1 and question 3.9 in the book, but obviously those questions are a bit too long. You need to remember that your test is only an hour, and we can't have a question which is too long and covers too many months. So this is why I put this one together, to try to maximize on doing as many things as possible in the same one question. Right, so let's see what we've got happening here. The initial information is that we have a 60-day debtors collection period, and we also have a 60-day creditor settlement. Okay. We're now wanting to find out if we can improve the situation, if we keep the credit settlement period the same, but if we shorten the debtors collection period to 30 days. So we want to do this for a period of 2 months. So here is an incomplete abbreviated income statement at the top. Starting with sales, we have a couple of missing values, and we want to be able to fill in the values there for the net profit. We also have here the format or a template for the bank statement part. And when we are done with this, we are going to obviously have it all filled in. Right. So starting with the income statement part. Okay. The first thing that's missing is cost of sales. Once we have that, it's a very simple procedure to get the gross profit, and then net profit is also very easy. So don't forget, like you learned in Learning Unit 2, sales, subtract cost of sales, gives me gross profit. Add any other incomes, take off any other expenses, and we conclude with net profit. Right. So let's investigate the additional information that we've got here. All very important. Right. So the first thing that we need to complete is the cost of sales number. Right. And as you can see here, point number 1 is where the relevant information is. So it says cost of sales is a percentage of sales. In fact, 50% of sales. So let's go ahead and do that. So how are we going to calculate these two values over here? Very simple. For March, your cost of sales will be 50% of 170. And for April, 50% of 180. Then we might just as well do the gross profit calculation. We will subtract that cost of sales from the sales, and it will give me GP. So let me show you in the answer. We're over here. And of course, I've helped you by showing the workings in the brackets there in the light blue. So our cost of sales for March is 50% of March's sales, which gives me the 85,000. Subtracted from sales gives me a gross profit of 85. It would be because it's half. Then the rent income is received in cash, so that will be added, and then cash expenses will be subtracted, giving us a final net profit for March of that 55,000. Then let us do the same for April. First thing is we need the cost of sales for April, which is half of April's sales. So that's going to give me the 90,000. Subtracted from sales gives me GP of the other 90,000. Add the rent, subtract the expenses, and here we're going to have a slightly higher net profit for April of 60,000. Now we want to complete the cash flow element of the question, and we want to see if that increase in the net profit is matched by a rise in the bank balance or not. If it isn't, remember I said there's that term overtrading. It could also indicate something about the liquidity position of the business. Right. The first thing that we need for your cash flow statement is obviously how much money we have in the bank at the start of the beginning period. So we're going to have a look at the question. Under the additional information. Right. The last point over here says that the bank balance at the beginning of the period, remember the period is March, will be the same as the closing balance on the previous month. So as at the end of Feb, we had a positive balance of 80,000 in the bank account. So that is where we begin over here. Now we need to see during the month as a result of receipts of cash and payments of cash. Remember, only cash because we're looking at what's happening in the bank. Right? We want to see how that opening balance will change, and we're wanting then to finally have a closing balance for a month. So all we need to identify here is all the receipts of cash and all of the payments of cash, following the headings that are given. So first of all, the question did tell us over here that we have 5,000 Rand per month in the form of rent income. And we also make cash expense payments of 35,000 Rand each month. So let's do the easy part there. Let's fill that in. That's over here. The two 5,000 Rand amounts for your rent income, the two cash expense amounts of the 35,000. Now, these here are the more important ones. Right, so we're going to NB these. These are the types of things that are done in question 3.1 and 3.9 in the book. So let's do cash receipts from cash sales first. I'm going to do the cash sales first because that is the slightly easier one. So remember here that a cash sale, when do we collect the money? In the month in which the sale took place. So for March, I'm needing to go up to my question and I'm needing to see what the sale was for March. I see it is 170,000. Now I need to see what percentage of that is cash. So I need to look at my additional information. And here we have it. So it says that 70% of all the sales are on credit. So what then does that also tell us? This is what we're looking for at the moment. If 70% is credit, it must be that the other 30% must be cash sales. So that's what I'm now going to do for March and April. Just coming up to the question. For March, 30% of 170. For April, 30% of April's total sale of 180. Let's put those values in. There we go. And I've also helped you with the working. So cash receipts from cash sales, 51,000 for March and 54,000 for April. Next up, we're going to be having a look at our credit sales. So we need the information to do with the debtors. So as I did say before, pay attention to the percentage. So the cash sale was the 30%. Credit sale must be 70%. But we need to have a look here. Why am I using these numbers? So remember, this calculation is based on the new debtors collection period of 30 days. Let me just type that in. So we're going to have a 30-day collection from the debtors. So we need to go back, don't we? So we're going to be collecting money in March from a sale that was made when? February. So we need to have that information. So if we have a look in here, this is exactly where it is. See over here, we got the older information. We're going to have sales for Jan and Feb. Which one am I looking for here? I need this one. So first of all, I'm going to have to find 70% of the sale in Feb. That will give me my credit sale, and it will be collected a month later in March. So here is my workings. 70% times that 160. And where did that 160 come from? Just going to remind you there, Feb. And that will give us 112,000. Now in April, I'm going to be collecting from my debtors from a sale that was made 30 days before. So that will be March. So as we know, March's sales were 170, and 70% of that is credit. That's where I get my 119,000. So there we've dealt with the sales. The next thing that we're going to look at is going to be our purchases. So let us begin, first of all, with the cash purchases. So we need the percentages. So up here to the question, here's something to do with purchases. Yes, 60% of all purchases are on credit. So what does that also tell us? Therefore, that the other 40%, sorry, it was over typing that, the other 40% must be cash. And let me just try and get that back in there. 30% credit for the sales. But interesting, be careful here. We don't have the amount of purchases. So we need to read the question to see what we're going to use. It's all here. See this. It says purchases is equal to cost of sales in a month. And as we already saw in the first bullet, your cost of sales is 50% of your sales. So let's do first of all the cash. So how am I going to do this? For March, I'm needing to have purchases, which means I've got to find cost of sales. Cost of sales is half of sales. Right, so if you remember that the sales for March out of the question was 170,000, Step 1, I need to change that into purchases. So 50% of that. And then when is that going to be made? I'm going to make that payment in March because remember we are starting with the cash purchases. So have a look over here. There it is. It's going to be the 40% because that's the cash component. 40% in both of the months of what? Notice here where I'm going to get this 85,000. That 85,000, remember that is going to be the 50% of the sales for which month? March, because that will give us the purchases. So 50% of the sales for March gives me our cost of sales. And then of that, 40% is cash. Now let's do the same for the other month. So first of all, besides the 40%, where does this come from here? I'm needing to have my purchases. And if you remember that the purchases are going to be the cost of sales. And what's the cost of sales? As we said already, it will be the 50% of the sales for April. So 50% of sales for April will give me the cost of sales. Cost of sales represents purchases. And then finally, the 40% will be the cash purchases. Right. Only one more tricky thing left to do. And that is cash payments to creditors. So remember now the timing of this one. This one is still going to be 60 days. So for March, the month that's going to be the relevant one would not be the month before. It will be 2 months before. So we are going to have a look at the data for January because we are only making that payment 60 days later in March. So first thing, I must find what my purchases are. Purchases is 50% of the sales because we're going to be using cost of sales. So have a look over here. This amount that I'm using here, where am I getting that 150? That is going to obviously be for January. And where am I going to find that piece of information? Here. So sales for January were equal to 150,000. That's where I found the number. So step 1 is I must convert that into my cost of sales by finding 50% of it. And that now is going to represent my purchases. And then I'm going to find 60% of that, and I'm going to lag the payment by 60 days. So I'm going to record it as a payment in March. There's all of the workings. Don't worry about it. Here's the workings. So 50% of January's sale will give me cost of sales. That is my proxy for my purchases. I need to then find the credit component, which is the 60%, delay it by 60 days, pay it in March. Then exactly the same is going to happen over here. In April, I will be making a payment for a purchase that was made 60 days before that. So that would be February. So I must go straight away and get my February sale. And we can find that over here. Here's the February sale. 160,000. So I'm going to take my February sale, find half of it. That will give me cost of sales, which gives me my purchases. Then I'm going to find 60% of it, pay it 60 days later in April. And that's exactly what we've done over here. That's where we're going to get that amount. So everything is now completed. Please pay attention here to when we have a payment. There must be brackets, because brackets indicate an outflow of cash. We don't want to go to all of this trouble, do all of our thinking and our calculation, get it all correct, and then bomb out at a very simple thing by adding things that we should be subtracting. So a positive number is a receipt of cash. It must be added. A negative number, indicated with brackets, is a payment. It will reduce the bank balance. It must be subtracted. So now, what I'm going to find for you is this important part here, the movement during the month. This is a very important section over there. So I'm going to take all of the positive receipts. I'm going to add those together, and I'm then going to subtract all of the payments. So let's just do March. So what am I going to do in March? I am going to add various things. So I'm going to take my income. I will add that. The cash receipts from debtors, I will add. Cash receipts from cash sales will add. Then what's going to happen? My expenses, I will subtract the 35,000. Then my cash payments to creditors, I'll subtract, as I will with the cash payments for cash purchases. So you add and subtract all of the relevant amounts, and that will give me the overall change during the month of a positive 54,000. So I started March with my opening balance of a positive 80,000. As a result of the trading activities during March, I'm going to increase my balance by 54,000. So I'm going to add that, and that will get me down here to my closing balance as at the end of March of 134,000. Then we're going to repeat. If I end March with 134,000, so it means I'm going to come up here and I'm going to begin April with that 134,000, and I'm going to do the same. So in April, I will add 5,000 income. I will add 119,000 cash receipts. I will add receipts from cash sales of 54,000. Then from that, I'm going to subtract my 35,000 cash expenses, as well as my cash purchases of 48 and my credit purchases for 36. That will then give me an overall positive change of the 59,000. So how am I going to end April? Start April with 134, add a further 59, and that will then mean that my closing balance as at the end of April is now 193,000. So we can see that above, when the net profit increased over the period, it's matched with a rise in the bank balance for the month. So please do have a look at this question and practice the ones that I have mentioned in the textbook. And just to repeat those ones again, sorry, while I'm just getting the book. You can have a look at example 3.1. Let me just type these for you. Example 3.1 in both scenarios. You can do question 3.1. And then there's one very comprehensive question right at the very end, and that is question 3.9. So if you do all of this and you listen to the recordings, I'm sure everybody's going to do absolutely splendidly in the questions in your test coming from Learning Unit 3. Right, so just going to take a bit of a pause, and I will be back very soon with some more recordings to help you with Learning Unit 4. So once again, thank you so much for your time. It's been a pleasure explaining these concepts to you. I hope they make some kind of a difference. So for the moment, I'm going to end up here. End of the recording.